Today, Egypt consistently ranks as a top 3 tech market in both MENA and in Africa, based on funds raised by local startups. In MENA, for example, Egypt consistently ranks as the 3rd most funded startup ecosystem behind the UAE and Saudi Arabia, if we exclude Israel and Turkey. If we include these last 2 markets, then Egypt moves to 5th place. Egypt has always been a dominant breeding ground for startups, whether you look at the size of the ecosystem and its 109 million inhabitants, or the amount of venture capital deals it attracts, or the overall amount of funding the startups within the ecosystem raise compared to others in the region. When we look at the top tech hubs on the African continent, Egypt follows closely behind Nigeria and South Africa as the most active startup ecosystems. Whichever metric you use, whether it's startup funding raised or the number of scale-ups in each ecosystem, which are defined as startups that have raised $1 million or more, the results are surprisingly consistent. The bottom line is that Egypt is a major entrepreneurial player across these 2 large emerging regions and should not be ignored. What's more is that Egyptian startups also have the opportunity to produce unicorns just by focusing on domestic growth due to the sheer size of its consumer population. This is similar to what we can find in Nigeria and to a lesser degree Saudi Arabia, and it has already been demonstrated by Egypt's current fintech unicorns, MNT Halan and Fowry. Each have focused only on the local Egyptian market and have reached billion-dollar status without requiring geographical expansion to achieve scale. So how is the Egyptian market doing? Well, truth be told, after experiencing record growth years, Egypt and its startups have fallen on some economic challenges in 2023 and into 2024. While the world saw VC funding dry up in 2023, Egyptian startups are having to deal with heavy currency devaluations and runaway inflation. In light of these trying times, Egyptian startups are forced to make tough decisions in the face of dried up funding to bridge the gap. Either cut back on costs or boost revenue by raising funds, increasing prices, or expanding their customer base. But getting new customers in Egypt is not as easy as it used to be, as people have less money to spend, and the revenue generated from domestic customers has half the purchasing power that it once yielded just 1 year prior. As a result, Egyptian startups are exploring new opportunities by bringing their products or services to customers beyond Egypt's borders. So then the big question to ask is, where should Egyptian startups go? This simple question leads to a debate about whether Egyptian startups should focus on other African countries or the Middle East. And the answer is not so simple. Among Egyptian entrepreneurs, historically there has always been this tendency to grow towards the Middle East versus the rest of Africa. Egyptian entrepreneurs often think that the rest of the Middle East is an easier market to crack because of cultural similarities and the shared Arabic language. There's also the perception that cities like Dubai and Riyadh, as well as the rest of the Gulf countries, provide greater access to capital and a wealthier consumer base that are willing to pay more for the same products and solutions than in Egypt or in the rest of Africa. Many Egyptian startups told us that they could sell the same product they were selling in Egypt, in Saudi Arabia, and the UAE for significantly higher multiples. But many investors we spoke to believe this bias against expanding into the rest of Africa is hurting Egyptian startups. The logic used to go that if Egyptian startups could develop advanced solutions in Egypt for a fraction of the cost that the GCC startups could produce it, they could win in those markets. And for a while, this was true. And for some, this continues to remain the case. But today, numerous startups based in Dubai or Riyadh have their own development teams operating in low-cost markets such as Egypt, Lebanon, Jordan, Philippines, Indonesia, Thailand, Poland, Portugal, Spain, and even some other African countries. The list goes on and on. In this context, Egyptian startups may find greater success bringing their tech solutions to countries that not only need it, but have less competition, which may be found in Africa. Many investors we spoke to consider this among the various reasons why Egyptian startups should dig a little bit deeper beyond the short-term benefits offered in Gulf market. Karim Aziz from IFC told us,
Egypt should be a hub and entry point for the rest of Africa. Unfortunately, what is happening is that Egyptians are somewhat inwardly focused. Many of them think, why go to the rest of Africa? I'm happy here. That mentality needs to change.
And Tarek Assad, managing partner at Algebra Ventures, a leading VC firm in Cairo, agrees.
While the GCC presents massive opportunities, it's not always the right expansion for all startups. When you look to grow your startup, you have to find markets that have the same problems, and we are seeing similarities between Egypt and other African markets.
For example, in Egypt, less than 5% of people have credit cards. The United Arab Emirates, in comparison, has a per capita rate of credit card usage at 89%. The largest segment of startups in Egypt are fintechs, addressing problems like access to credit and financial inclusion, which closely mirrors the challenges faced in other African markets, not necessarily GCC markets. There are small and big differences too. For example, the Middle East and the GCC in particular is a predominantly iOS market, while Egypt and the rest of Africa is an Android market. While there may be greater access to funding in the Gulf, the cost of expanding and operating in the GCC is also significantly higher than in Africa. That said, there is no standard template for Egyptian startups. Choosing a market depends on the startup, the problem they are trying to solve for, and the sector that they are in. But one thing is for certain, Africa can no longer be ignored. Many African markets are now attractive for Egyptian startups, offering both complementary ecosystems and opportunities. And that's why several investors in Egypt have started looking at fundraising for a Pan-Africa fund out of Egypt. Ahmed El-Alfi, founding partner at Sawari Ventures, told us this.
We are convinced of the massive potential for innovation and impact in Africa. But despite the similarities in demographics and addressable challenges, we have seen companies struggle to scale across the continent. We believe this is not only due to a funding gap, but because there aren't enough regional, Pan-African investors with the network, capital, and ability to bridge existing gaps and support startups with regional aspirations. We are looking forward to step into this gap.
While Egyptian entrepreneurs are known for their resilience, how many can say that they have a Pan-Africa vision? We can't wait to see the first Egyptian startups start expanding across Africa.
Want to know more about Egypt startups? Check out our full report on lucidityinsights.com.